Is one of the biggest Canadian companies a sexy investment? I will answer in this video. And with that, welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I want to talk about Canadian National Railway, one of the biggest railroad companies in the world. The biggest in Canada. It connects all across Canada from east to west and also south the border into the US market down to New Orleans. So this is a very, very high connecting system, and we will find out if this is also a good business to invest in. Here on this map you can see how much Canadian National Railroad dominates the market in Canada. There are just two big railroad companies. It's Canadian Railroad and it's also Canadian Pacific, but Canadian Railroad really is a dominant player. And not just in Canada, also worldwide is the second largest railroad company. So we have a really big player here, and we will dive deeper into the financial numbers of them. And there have to be something special with this company because even Bill Gates have them in his portfolio as a third biggest position. So I think it's worth to look a little bit deeper. And with that said, just go on and take a look at the financial numbers. First of all, Canadian National Railway is a dividend payer, just a small dividend of 1.2%, but it grows fast. Over the last 5 years, the growth rate is at 12.48%, and the dividend growth goes on for 11 years now. So maybe the dividend yield overall is not so high, but the dividend growth rate is nice. And the payout ratio with just a little bit over 30% is very, very solid. When we take a look at the revenue, we see there's a little bit cyclic, like a lot of the companies in this sector. But overall, it's just growing, and it's growing kind of fast. And this is a nice picture overall. It looks like we have a good business here. With this growing revenue, we also have a growing earnings per share. Lately, with the pandemic situation, of course, we have a little bit of decrease, but overall, in the long term, there is an increase of the earnings per share, which is also a very, very good sign. What's also exceptional is their high margins. They have a gross margin even now in the pandemic situation of 74%, an operating margin of over 34%, and a net margin of 25%. This is really, really high margins. So this company just make money, and even in times of a recession, they make still a lot of money. So a very, very healthy, solid company. And also when you look at their balance sheet, it's very solid. The debt equity ratio is just at 0.7, just mean the equity is way higher than the long-term debt. That's a good sign. That's very, very solid, and this company have a very strong fundament. And absolutely amazing is also the free cash flow. You see there is a very strong free cash flow all the time, and even lately in the times of the recession and of the economic problems all around the world, and also of course in North America, they have a very, very high free cash flow, and that's a dream for every investor, especially high quality long-term investor like we are. So this company really, really sexy. As I started this video, I have to say Canadian National Railway is a very, very high quality business. And even with their latest Q2 numbers, of course you can see the impact of the current situation and of the current recession situation, but you also can see that they still make money, of course. And also here the highlight is the free cash flow, which is almost doubled if you compare it to the same time in 2019, and this is really amazing in these difficult times. And then just take a look at the price, because as we learned, you can have the best business in the world, but if you can't buy it to a reasonable price, it makes no sense to invest. And so let's take a look at the price. Canadian National Railway right now trades at $102 US dollar. This is a US chart. I just looked for a Canadian company which is also traded at the New York Stock Exchange, and so we have Canadian National Railway, and every number I tell you here is in US dollar. Canadian National Railway right now is traded at $102. My calculated intrinsic value is $85, so a kind of overvalued right now. And if you want to learn how to value a business, a stock, just click the link at the top of your screen. There I made a video about how to calculate the intrinsic value, and so you can learn this, and this is really important because even as I said, you can't buy into the best business in the world just blindly. You have to know its worth, and you have to know when it's on sale or even when it's expensive. So for me, Canadian National Railway looks a little bit pricey right now, and therefore I will stay away, but it's very high up on my watch list because really this business model and this market position of this company is really amazing. I just a little bit mad with myself that I just was sleepwalking and never took a look at them even earlier. But now I did, and of course I will put them on my watch list, and we will see if there will be a chance in the future to get this company to a fair price. So what's my conclusion then? With Canadian National Railway, we have a great business, an amazing business with a great business model and a super strong market position. There's almost no minuses here. The only minus is the price right now, and I have to wait. And I will wait patiently, and hopefully I will get a chance to buy into this great company at some point. So that's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel and ring the notification bell to never miss another video. And then we will see the next time, then with another analysis of another stock from a watch list. See you then. Take care. Bye bye.